Today, we're diving into digital assets. Our goal? To equip you with the actionable insights and strategic clarity you need to confidently advise your clients and optimize their tax positions in the coming year. Let's get started.
They've done, again, a look back, if you will, from April of 2020 to July of 23, 420% increase on the number of virtual currencies that are out there. A lot of transactions that the IRS knows a lot of them are not being reported. So what's coming down the pike, and this would be a good opportunity to talk to your digital asset clients, is the new form that we'll see starting for 2025 transactions, and we'll see those in 2026 for doing the tax returns. And that's the 1099 DA. So the crypto stats that are out there, 13,000 plus different types of cryptocurrency. Now, most people use the term Bitcoin, and they might have Ethereum or Polkadot or one of the other many different types of crypto, but Bitcoin is kind of that generic label, just like Scotch tape is used for all transparent tape. So the clients that get into this, what I've found is they don't dabble in it, they get in and they get in deep. I have a couple of crypto clients that really push the envelope as far as number of transactions. I thought day trading was crazy, but crypto just go to a whole nother level. The first year this individual came in, he had 78 pages of transactions, about 50 transactions per page. And what makes it difficult with crypto is very volatile. So you have to value this transaction every single day. So I told him right out the gate, I can't enter all of this information. I don't have the tools, the time, or the patience, and you can't afford to be put on the clock for something like this. But there is a solution. And at the time I had done another seminar on this topic, I gave him a list of about the top 10 that were listed on the internet of software that they could use to convert the information they had from their crypto exchange into something that I could use to put into the tax return. These guys were both buddies. In fact, I got a referral for the second one from the first client. They both chose Zen Ledger, which works really slick. They put the information in, it kicks out the 8949 for tax purposes, the Schedule 1 if they have any like staking rewards, and it makes it real easy on my part. So I saved the 78-page booklet that he got from Coinbase, and then I put the documents, I printed them off. He gives me access basically to his account to look at the tax forms. I can't make any trades on his behalf, but I just take a look at the final result. I will throw this caution out there. It's only as good, this software now, as the person that's entering the information. Because as we went through, he was in the office with his wife, gave me the password, I looked it up, and I said, well, it looks like you had a decent year, $20,000 plus in crypto profit. And he said, wait, I never had that kind of activity, or at least profit. He had a lot of activity, but not a lot of profit. And I said, well, this is the report that I have from Zen Ledger, so you're going to have to help me understand what's going on. Well, it turns out that he was moving money from multiple wallets. A wallet is where you store your digital assets. He had multiple wallets. And if I move money from Chase Bank to Associated Bank, or a brokerage firm, AXA Advisors, over to Prudential, that's not a taxable transaction. But you got to code it right when you're talking about moving money between wallets. They thought it was a sale and reinvestment. So what he had to do is go back and recode those entries. And then he gave me access to the updated version, and it was really like a $1,700 gain. Huge difference. So at this point, I caution all my clients, if you're going to use software to do that, make sure you understand how to enter this. They know the trade volume is huge, over $170 billion a day. And one of the initiatives by the IRS this last year was Operation Hidden Treasure, where they're looking for people that are not reporting all of their digital assets. They took a look, criminal investigation now went back over a number of years, From 2018 to 23, they looked at 390 digital asset cases, and 57% basically were recommended for prosecution. They know that a lot of people get into this, one, to hide some of those monies because they don't think there's a paper trail. Well, the paper trail's coming. It's already kind of started. The IRS has already audited or subpoenaed some of these crypto exchange, which is the equivalent of a broker dealer for the stock world. That to me was the biggest hurdle when I first started getting into this world. They have a different term for everything. It's like speaking a second language. So I try to, as I explain some of this, tie it back into things that we already know. A broker, we understand. A digital exchange, pretty much the same thing. And the reporting is going to be coming out on this 1099 DA for digital assets. Now, some of your clients are already receiving information about gain, loss, basis, holding period on a 1099B. And this is another word of caution. I got into doing, I was going to get into some crypto. I never really pulled the trigger. I put in $500 into an account with Robinhood. I figure if I put something in there and I own some, I might understand it a little bit better. So with Robinhood, it's a free app on your phone. That's why it makes it very popular with a lot of clients. I deposited the money there, but I had to wait 30 days before I could make any kind of transaction. Once that 30 days was up, I went to look at the crypto that I wanted to purchase. Remember, there's over 13,000 choices now. And the one that I wanted was not available through Robinhood. I'd have to go through a different crypto exchange if I wanted to get that. Well, I got busy and life went on, and I just let that money sit there. Finally, this year, I decided I'm going to buy something with it. So I got an ETF that's done fairly well, but I never got into the cryptocurrency. I suggest if your clients are not computer savvy, they kind of stay away from this. I've got some senior clients that are into some crypto, and that's only because they have a son or a grandson that is invested in this. Maybe he's done well, so they might help mom and dad or the grandparents out to getting in to some of the digital assets. But a lot of people, again, fall for the scams. At the very end, I'll talk about some of the scams that are out there. Reporting. Basically, we're not going to see these statements until 2026. So I'll go back to what's happening now. I said that you're getting some that are reported on a 1099B. That's how Robinhood does it. Well, they also send out a 1099B for Robinhood if you have mutual funds or stocks through them. So you're going to have to get two 1099B statements for this year and next. And then there'll be two separate statements, one for digital assets and then one for their other investments. Now, digital assets, who is a asset broker, basically the exchange that I talk about that will be required to issue this information. Centralized or decentralized exchanges, wallets that allow you to buy, sell, and trade digital assets. Some wallets are just like a cold storage where I save everything on a flash drive. And for extra protection, that flash drive can be detached from my computer. So if someone hacks into my computer, they can't steal my digital assets. Not when my flash drive is pulled out of my computer. They only basically have access to hack in when I have it connected. Well, there's problems with that as well. Some people have lost some of their flash drives, their cold storage wallet, and that's an issue. Some people have forgotten their passwords, and that can be a serious issue. But those are the people that would have to, or it could be a physical kiosk. I remember a few years back, we were at a hotel in Madison. By the elevator, they had the traditional ATM for cash. They also flashed a screen about every 30 seconds that you can also purchase Bitcoin there. So can you imagine someone trying to enter all of that information for the kiosk to issue that report down at the end of the year? They're going to have to adhere to that. They may change that ATM to just get cash and no more digital assets. There's some exceptions to this rule, right? There's always exceptions when a rule comes out. If someone's just mining cryptocurrency, and some miners basically are on the internet and they're verifying some of these transactions, and they get paid for their services, and they get what's referred to perhaps as an airdrop, where coin is dropped into their account. It's kind of like their digital payment for their efforts. They don't have to issue. And if you have a hard wallet where it's just a storage, you don't have to worry about that, or software developers or certain smart contract developers. They're not going to be issuing these 1099s. It's going to be essentially the exchanges. I think Coinbase is probably the biggest one that's out there, but there's others like Robinhood that I mentioned. What are they going to track? Well, essentially the same things that are on a 1099B. We need the date acquired, the date disposed, what's your sales price, more importantly, tracking basis, so we know if they have a gain or loss. Now, technically, this is a non-covered investment. I don't want to say security because it's technically not a security. And I can remember not that long ago, stocks and bonds were like this. We had individuals that sold some stock. It wasn't a rule that they had to track basis. And all we knew is that they had a gain, right? I tell my client, how'd you get this? Did you buy it? That's how most people get investments. Could inherit it, could have been gifted. Usually they say, I bought it. Okay, what'd you pay for it? And they can't remember. So my question to some of my clients that would say that, well, this is an investment, right? Yes, buy low, sell high. That's the American dream. Well, if you don't remember when you bought it, how are you going to know when to sell it that you're in a profit situation? If you can't remember, go back to your broker dealer. So they would, and about a couple days later, the phone would ring and they would say, my investment guy said, you're the tax person. You should know what the basis is. To which I replied, I wasn't in the room when you bought the investments. Now, if you can't remember, the investment person is supposed to track that. And by law, they have to go back and keep those records. I sound like a skeptic, but they don't get a commission for doing service work and looking that information up. So thank goodness they came up with the rule that now we have covered securities where the broker is supposed to track that. And if they change broker dealers, they're supposed to share that information with the next broker dealer. That's what we're going to have with digital assets, but it's not there yet. Right now, technically, they don't have to. And that's where the problem is going to come in. A couple other things we should be aware of. Under the final regs, they've made a couple of exceptions to this reporting. An optional $10,000 overall de minimis threshold for a certain stable coin. Again, here's another term that's specific to the digital asset world. What is stable coin? This stuff is so volatile. It could drop 30% in one day. So if I'm going to use it to purchase something, maybe go to the local car dealership and buy a vehicle, I want to make sure that what I have stays and holds that value. I can exchange my current cryptocurrency that's very volatile for a stable coin. It's kind of pegged to the US dollar. So there's very little fluctuation there, so that when I go there, it doesn't drop in value when I'm talking to the salesperson. So they have a de minimis threshold there of 10,000. And instead of reporting those on a daily basis, they're going to allow that to be on an aggregate basis, so they don't have to worry about reporting each transaction. The other stuff is reported every single day and has to be valued every day. This is an area where I think there's some pushback, and there may be some change before it even hits. They're phasing this stuff in, and in 2026, they want real estate, like title companies, if there's a purchase of real estate with digital assets, to report this information. Well, of course, they don't want that additional cumbersome paperwork and tracking that. But one of the things that some people are doing is trying to buy assets with digital assets and have no paper trail for that. So we'll see who wins. And that's something that's, again, coming down the road. De minimis threshold, again, if I'm a digital asset payer or an exchange, would not have to report that transaction if it doesn't exceed $600 for the year. So a de minimis threshold. What do we know if someone doesn't get a statement? Does that mean if they had a $500 sale, we can ignore it? We still, hopefully, they are going to report it, even though it's a de minimis threshold. And we still have to report all of those transactions, whether they get a statement or not. This threshold that we talk about is only applicable for digital assets other than the stable coin and certain NFTs. That's digital artwork, could be music, that type of thing. It's a whole different world where people invest in those types of assets. Now, here's a basic example of what we're talking about. If a customer basically goes through an exchange and they have sales of $9,000 in stable coin and $500 using digital assets, maybe it's Ethereum. Technically, that wouldn't have to be reported. I'm hoping that they would anyway, but that would be the de minimis exception that they're referring to there. So a penalty notice, a little bit of relief here for 2025. The IRS is not going to hit hard on these exchanges with penalties if they make a good faith effort to file these forms when they're required, which would be January of 26. So we'll see the slow rollout of this, but it's going to help. By the way, how many people in the room now have some individuals that are investing in digital assets? Just kind of a quick survey. So that's probably about 75% of the room at least. I don't have a lot of clients, but the ones that are into it, they are into it pretty big. Temporary exception, again, notice 2024-57. This penalty that we talk about, this relief, not going to apply if it's for a reward or if it's for earned compensation. There are some people that can take their wages in digital assets. In fact, there was several NFL players that signed these huge contracts. They'll take a portion maybe in Bitcoin. Well, on a smaller scale, like I think it's the city of Denver wants to be hip and trending with the new wave of digital assets. They allow their city employees to take some or all of their compensation in the form of digital assets. So it could be someone that's the street sweeper that's taking some money, partial anyway, in part of his pay. And of course, that all has to be reported. There is no de minimis exception for those. Now, staking, let's jump over to page 4 and talk about some staking transactions. Let's first define what staking is. There are individuals out there that maybe hold some coin and they may enter into a contract where they agree not to sell. Maybe I own Ethereum. I agreed for 3 months, I'm not going to sell that, and I can go to the blockchain and I can verify some of the transactions that are out there. It helps basically secure the network, validate transactions, and then for my efforts, for agreeing not to sell it or for doing some of that additional work, I'm rewarded. They drop some new coin into my account. It's kind of like I get interest or dividend. It drops into my account. I didn't do anything really in some cases, but it is a taxable event. When it's taxable has created a bit of a controversy because of a court case out of Colorado. There was a couple there that basically got some staking rewards and they didn't report the tax on it. They said, in their opinion, they shouldn't have to sell or they shouldn't report this until they sell the new coins that they receive for staking efforts. Well, the government didn't agree with that. If I get reinvested dividend and I get some more stock from the original company that I own some stock in, whether I sell that new stock or not, I'm taxed on it when I have an unrestricted right as it dumps into my account. I have interest from the bank. As soon as I get an unrestricted right to that interest and it goes into my account, that's a taxable event in the current year. They went to court and of course the IRS won. We're not going to change the tax laws just for this couple. Well, there was a lot of other people out there that were staking that were doing the same thing based on this particular court case. So make sure that they understand that whether they sell it or not, once they have an unrestricted right to sell it, that's when it becomes a taxable event. So on page 5, here's a quick look. Go back here at the first draft version. The second one came out later this year as well, but they're pretty similar. I kind of talked about in general terms because it might change yet again before we get to 2025, but they're going to be reporting the same information that we have with a few extra additions. We're not going to see these for a couple of years, about a year and a half now, but one of the things interesting here on page 5, in box 1I, there's a box for wash sale, which is very strange because wash sale rules, and we'll talk about what those are a little bit later this morning, they're not applicable when it comes to crypto assets. When we talk about the wash sale rules, the IRS classifies crypto as property, not security. So if it's a stock and I sell, have a loss, and buy it back within 30 days, that's a wash sale rule. It's coded properly on 1099B. I don't know why they have it here unless they plan on changing the rules going forward. The IRS might be taking a look at changing this with future regulations. So as it stands right now, I can sell crypto, have a loss, buy it back that same day if I want to, and I can still take that loss because for tax purposes, digital assets are considered property. Now, I'm having a heck of a time with this equipment today. Box 10 remains a bit of a mystery. I think they might clean that up going forward because they're asking here on the 1099 DA, if it's a non-covered security, they want to know why. You don't have to do that for a 1099B. So maybe it was acquired before it became a non-covered security. Maybe it was transferred to the broker and the other exchange did not tell me what the basis was, so we never had that information going forward. So they have to check a box or give a reason why. I think they might clean that up, as well as the box 7A, B, and box 8. They're simplifying that in the second version where it was just one box. We're going to see these. Tell your digital asset clients to look for these next year when you see them, because anything new, sometimes people think, well, I've got everything that I've had from the prior year. This may be the last time you get a chance to talk to those folks before you see them in early 26. The pressure's on the IRS to come out with more rules and clarification for that. I'm thinking about this next year doing a specific cryptocurrency webinar, maybe a 1 or 2 credit class that just covers digital assets and how to get that on the tax return. I want to talk quickly about some scams. I love show and tell. This happened about 2 weeks ago. I received, and I hope that I saved it, I did. I received an email dealing with an airdrop. Basically, this is from a chain link airdrop opportunity, dear blank. They didn't even put a name in there. We're excited to share this exclusive opportunity. We're basically releasing 150 million link tokens in the form of an airdrop. We'll drop it right into your wallet. All you have to do is click the hyperlink to give us access to your wallet, and we'll drop it right in there. That is a complete scam. What are they trying to do? Have access to my wallet so they can take whatever other information, or I should say tokens that I have in there from other digital assets. If you're not savvy, you shouldn't be dealing with this kind of information. This is kind of an updated version of an old scam. If you've been around long enough, every office in America probably received a fax over the last 20 years that said some king in Africa passed away with $11 million. You get this from a law firm, and basically this lawyer is representing this estate. And if you say that you are related to this African king, I'll split the 11 million. Actually, what they do, they say, you take 5 million, I'll take 5, and we'll give 1 million to charity, kind of tugging on the old heartstrings. And some people, all you have to do is give us access to your bank account and routing number, and we'll take it from there. People are falling for these for years. This is an updated version of that same type of scam.